Good morning, traders. Hope we all had a fantastic weekend. So today is Monday, the 4th of April, and time is now 8:49 a.m. GMT +1. And this is our next edition of Technical Talk. So where are we right now in the markets? Well, European cash equity indexes are largely lower across the board right now, with the FTSE being the outlier, up by 0.2%. Look, Germany's DAX is down 0.4%. France's CAC 40 is down by 0.4%, and the Euro Stoxx 50 is also down by 0.4%. In terms of US equity index futures, as you can see, we are marginally lower this morning. Dow Jones futures, S&P 500 futures, and the NASDAQ 100 futures are down by 0.1%. Now, in terms of where we left Asia this morning, overnight, excuse me, we did end higher across the board, as you can see here. 0.3% for the Nikkei 225, 0.7% for South Korea's Kospi, and Australia's ASX 200 ended higher by 0.3%. Now, in terms of where we are in the currency space, major currency pairs are currently, it's not that much of a there's not much of volatility being seen right now. We do have the Aussie dollar up by 0.3% and the New Zealand dollar up by 0.1%. The dollar yen and pound dollar are also up by 0.1%. The dollar CAD is down by 0.3% and the euro dollar is down by 0.2%. Now, in terms of the crypto market, we are seeing a marginal bid in early trade, with an aside with Bitcoin, the outlier, down by 0.4%. Look, Ethereum against the dollar is up by 0.5%. Litecoin against the dollar is up by 0.2%, and Ripple against the dollar is up by 0.4%. Now, in terms of where we are, what we're looking at this week, key events this week are the RBA and the FOMC minutes. Now, the RBA is set to take the stage on Tuesday, as you can see, at 5:30 a.m. And this is GMT +1. So 5:30 a.m. We are not expecting an interest rate change, so the focus will be on the rate statement or any shift in the language of in the rate statement. Now, on Wednesday is when we see the FOMC minutes, and this is at 7 p.m. GMT +1. Now, the minutes offer detailed insights regarding the FOMC's stance on monetary policy. Now, you may recall that on March 16th, the FOMC raised the target range for the federal funds rate by 25 basis points to 0.25% to 0.5%. This was the first quarter-point hike since 2018, and the Fed has signaled bigger moves are possibly on the menu. So look, guys, really the Fed minutes this week will help shape the views on the probability of a 0.5 percentage point rate increase in May, and also provide details on how the central bank will shrink its balance sheet. Now, just bear with me. I'm going to switch things over to the charts. So look, this is the EU, the euro dollar currency pair. This is the weekly time frame, daily time frame, H4 time frame, and H1 time frame. I'll just remove the crosshairs so we all know where we are. So on the weekly time frame, as you can see, look, for anyone that follows my regular market analysis and also these technical talks, you will note that I highlighted the weekly resistance at 1174 combined with the daily resistance at 1224. Now, between 1224 and 1174, I highlighted this as a key resistance area. Why did I do that? Simply because of where we are in the overall trend. Look, longer term, we are lower. This is you could consider this the primary trend, I guess. But look, the immediate trend on the weekly time frame is also lower. We broke these lows at this point around the 1609 area, and we also retested a resistance area at 1473, 1583. And we broke support at 1174, only to retest this level, which was the highlighted zone. With that being said, so this was a key area for me, and the reaction is not really a surprise. Now, a key point to note on the daily time frame here. Let me just zoom in. So we did have a bearish outside reversal form on Thursday last week. Now, this formed as we tested the weekly resistance. So this added weight to the possibility of further downside pressure. Now, if we do continue lower on the weekly time frame, we have quasi-motor support at 0.778 to target, alongside the weekly channel support, of course, and as well as the daily decision point at 0.788, 0.854. Do note that this decision point also encloses these areas at this point on the weekly time frame. Now, in terms of where we are on the shorter term charts, as you can see, the H1 is now on the doorstep of the quasi-motor resistance turn support at 10.23. This is also merging with a descending support, right? So this is an area I will be watching. Well, we are likely to test this going on a current price movement. But look, the key area for me on the short term is this prime support on the H1 timeframe at 0.992, 10.11, which encloses the widely watched 110 figure. This, combined with the H4 trend line support at this point here, with 61.8% Fibonacci confluence at 10.08, alongside a 50% retracement, which is not a Fibonacci ratio, guys, at 0.996. So the combination of this H4 structure alongside this prime support on the H1 timeframe does it signals that we could see shorter term buyers come in. However, given that we are coming from a weekly resistance area, the likelihood of a rebound from this area the likelihood of a strong rebound from this area is unlikely, technically speaking. Just one final point on the euro dollar. Do note that we are now back below the daily time frames RSI 50 center line. Now, what this does is it informs traders that average losses are exceeding average gains. So this does indicate negative momentum for this market. Now, quickly onto the Aussie dollar. As you can see, we are still testing, we are still shaking hands with this resistance at 75.01 on the weekly time frame. Now, just above this area, we have we have prime resistance at 78.49, 75.99. Now, in terms of where we are on the weekly time frame, my main view right now is the underside of this prime resistance at 75.99 and 75.01. So this void in between here is what I'm watching currently. Now, in terms of the daily time frame, we are bullish, right? So we have broken above the 200-day simple moving average, a bullish signal. We have also broken a trend line resistance, another bullish signal. And we've also broken the neckline of a double top pattern. Now, the double top pattern falls in around the 69.91 region, enclosed within this decision point at 64.70.40. On top of this, we are forming a potential bullish flag, which is for many technicians will know, is a continuation signal should we break out to the upside. However, what I am watching closely is the 76.60 level. Now, this 76.60 level is the pattern profit objective from this double top formation. Now, alongside this 76.60 level, as well as we also have a Fibonacci resistance area between 76.41 and 76.09. The important thing to bear in mind is this area is actually glued to the lower side of the weekly prime resistance. So although we do have a bullish flag forming, although we are likely to get a breakout to the upside, it may be hindered by this area at this point here, given the weekly time frames influence. So do bear that in mind. Now, in terms of where we are on the short-term charts, H4 again, guys, H1 here. look, we are seeing some. We have seen some resistance coming in from the 75.47, 75.27 area. Now, these are made up of, as you can see, Quasimodo resistances. Given the higher time frame picture, I do anticipate a break of this area eventually, as well, in line with the should H1 manage to remain above the 75 handle. So should H1 manage to remain above 75, I do anticipate prime resistance at 75.61, 75 40 on the H1 time frame to be engulfed alongside the H4 resistance. Okay, so I am bullish on the Aussie dollar for the time being. Now, in terms of the dollar yen, you may note the Quasimodo resistance at 124.42 did a superb job in rejecting price action on the weekly time frame. Now, this is the weekly time frame. So as you can see, we have formed a clear rejection upper shadow. Now, for any candlestick enthusiasts watching, they may label this as a shooting star candle. For me, it's not. For me, yep, we have seen a clear rejection, but this lower shadow of this candle is just too prominent for me. To confirm that it's a shooting star candlestick formation. But we have, as I said, we have formed a clear rejection, which could be enough to tempt buyers, the sellers, to drop price back to support at 118.66. Very similar scenario on the dollar yen daily time frame. We have the resistance at 123.72 stepping forward last week. Look, demand is seen at 118.25, 119.16 on the daily time frame. Just quickly on in terms of the RSI, I think this was highlighted. No, it was highlighted in my market analysis. Look, we did test a resistance at 87.52. Now, this level has not been in play since 2014 and as far back as 2013. So it was an extremely high RSI value, and the odds of the indicator turning lower from here was extremely high in my opinion. So as you can see, we did turn lower, but in line with the mild correction we have seen on the bigger picture. But do note that we are in a clear uptrend, which we can see we're above the 200-day simple moving average, right? We are in a clear uptrend. Now, RSIs are fantastic indicators. I do use them. But given that we are in a clear uptrend, we can see false signals within the RSI emerge. So the RSI exiting the overbought space, considered a bearish signal by many, may be a false signal. So we have to bear that in mind. Look, should we hold below the overbought space, then I will be watching this support zone at between 40 and 50. As you can see, this has been a support zone since May of 2021. Now, this to me is a temporary oversold space. A lot of technicians will use this as a temporary oversold space because we are in a clear uptrend. Okay, shorter term, guys. Look, the main point I really wanted to highlight on the short-term charts was this double bottom pattern on the H1 timeframe at around 121.31. As you can see, the neckline was broken last week at 122.46. Now, the neckline break-in allows traders to chart a profit objective at around the 123.59. Look, the profit objective is relatively straightforward. We find the lowest trough within the double top pattern, double bottom pattern, excuse me, and then we extend that line to the peak within the pattern, and then we simply extend this value from the breakout point to project our take profit objective. Now, interestingly, this profit objective does align with the H1 timeframe's decision points at 123.76, 123.43. So overall, I am bullish short term in this market. Should we remain above 122? Should we remain above 122? All the better if we remain above this pattern neckline at 122.46. I do anticipate a break above this the 123 area to complete the pattern at this decision point. All right, so finally onto the pound. You may remember I did highlight this prime resistance at 34.73, 32.03 on the weekly time frame. I really like this area, and I do see that there is room for prices, the weekly price, to push lower to resistance at 27.19. As you can see, bears did step in last week, and I think they dropped around 0.5%. So in terms of the daily time frame, look, we are retesting a support, but the reaction has been, lackluster, right? So we've seen very little from the bulls here. If look, given where we are on the bigger picture in terms of structure right now, and the trend, guys, and the trend, look, we've been lower since 07, longer term, and this is this may not be a dip buying correction from this move here. This may indeed be a continuation move to the downside. So with that being said, on the daily time frame, I do not anticipate much coming out of this support at 30.82. So with that being said, so although we are bearish on the bigger picture here, on the H1 time frame, we had some really interesting technical short-term action. So as you can see, we had an AB equals CD move into 131 on Friday. As you can see, we have defended this area, albeit not to the pip, and we have reached the 38.2% Fibonacci retracement at 31.22. Now, this is derived from point A to point B, point D, sorry, excuse me. And we have reached the first profit objective. Now, for those who trade harmonic formations, may then reduce their risk to break even upon testing this 38.2% level, and may also liquidate a point of their liquidate a part of their position. However, the overall take profit target is seen around the 61.8% Fibonacci retracement, again taken from legs A to D at 31.46. Now, is this the final take profit target? As I said, some may liquidate their full position at this point, but some will look to initiate a trailing stop from this point in the event we do continue higher. However, given the bigger picture, given where we know where we're coming from on the bigger picture, I don't anticipate much going beyond here. Look, my line in my upside limit for the short term is this prime resistance on the H4 time frame between 32.28, 31.86. So yeah, do be aware of this if you are trading this market. Now, just one final note before I let you get on with your day. We did last week. There was a lot of talk about the 2-year U.S. Treasury yield. Sorry, the 2-year U.S. Treasury yield exceeding the 10-year U.S. Treasury yield. As you can see, we have inverted, and this is viewed by many as a reliable signal that a recession is likely to follow in 1 to 2 years. Now, adding to this, we also saw that the 2-year U.S. Treasury yield has also exceeded recently exceeded the 30-year U.S. Treasury yield for the first time since 07. So this is just something to bear in mind if you're following the markets. Look, guys, any questions, any comments, please do consider sending me or the team an email at marketsanalyst@fpmarkets.com, or alternatively towards our support team at support@fpmarkets.com. Again, guys, any questions, any comments to those emails. Look, thanks for taking the time out of your day to join me. Have a fantastic week ahead, and I'll catch you all bright and early next week. Thank you so much.